Lisa Hoffman, the Home Eddy Realtor with Remax Signature Homes, and today I want to cover the basics of property taxes. This is a really big topic. I'm just going to kind of skim the surface, but I want you to understand what they are, what they go to, why they're so important, and why you absolutely, whether you're using a mortgage or not, need to know what you're going to be paying and make sure you can afford it. So, property taxes are what you as a property owner pay to keep local services up and running. So, everything that's going on in the municipality, the police department, the DPW, and the largest piece of the pie typically goes to the school system. In Bergen County, especially northern Bergen County, it is not unusual to see anywhere between 70 to 80% of the taxes go to support the school system. In more economically depressed areas, they get state or federal funding that helps offset that cost. So a lot of times I'll have clients assume, okay, well, the more affluent the area, the higher the taxes. That's not always the case. And the best example of that is Alpine. Alpine has the highest median household income in Bergen County, yet it has the lowest tax rate of the entire county. They're paying less than 1% in taxes. So last year I showed a $2 million house and their taxes were $10,000. How does this work, right? So you have your house's value. Now, obviously, the higher the value, when you multiply that out by a percentage, it's going to be more money. In Alpine, and a lot of places where you have lower taxes, so Alpine, Englewood Cliffs, Paramus, you even see it kind of in Richfield, the price of entry is higher, so the cost of purchase is higher than if you were one town over, but your taxes are significantly lower, and those taxes you pay for 30 years. So I always tell people, hey, talk to your loan officer, see if it makes sense to maybe buy a more expensive house and pay less taxes over 30 years. You might actually wind up saving money. Sometimes you do, sometimes you don't. They're the numbers people. But to give you an idea, your tax rate, your general tax rate is essentially a multiplier that's used to determine the amount of taxes that are going to be levied against your property. So it's essentially $1 for every $100 times this multiplier. Now, let's say the house is $500,000, right? You're going to multiply that out. This is really important for new constructions, for renovations. When you see new construction, it says $0 in taxes. Obviously, you have to pay taxes. It just hasn't been calculated. The same thing with flips. If there was this falling down house and now a builder came in and made it all pretty, obviously the taxes are going to go up. The town's going to want their money. So how do we get an idea of what those taxes are going to be? And we might not know down to the penny, but we can get a pretty close idea. And that's essentially using the general tax rate. And where you find this is you can go to the New Jersey Treasury, and they have every town, and it tells you, what the general tax rate is there. Right now I'm going off of 2021 because that's what was posted. So let's say you have a $500,000 house in Alpine. I don't think that even exists, but work with me here. And the tax rate is 0.777%. So that $500,000 house is going to have taxes of $3,850. That same $500,000 house, if you placed it in Little Ferry, where they have a tax rate over 3%, their tax rate was 3.234%. That's going to be 16 and change. So now in New Jersey, our effective tax rate, which is essentially how we compare town to town or state to state, is the highest of the entire countries, right? So as a whole, our state as a whole is paying more than everybody else in the country in taxes. And then once those laws changed under Trump, back, I want to say it was 2018, but we really started seeing the effect in 2019 in the real estate market. Once that changed, so let's say you have that $500,000 house in Little Ferry, that's $6,000 and change that you can't write off because the max property tax that you could write off was $10,000. So that really impacted where people were purchasing in the state. Because, and even from this town to this town, because that made a big difference because you have to pay that every single year. So you need to look you need to look at it in totality, right? If I'm paying, let's say $12,000 a year in taxes, what am I getting for my $12,000? What is the school system? How is the school system rated? Am I going to pay $12,000 in taxes plus have to pay for my kids to go to private school? Am I going to pay $12,000 in taxes, but my DPW doesn't pick up my garbage? That's something that not all towns in Bergen County do. Some towns you need to pay for private garbage disposal. That's not included, that's not provided by the DPW. You need to really see what you're paying. Are those services, adequate for you, what you thought they would be, and what you want them to be? And then that kind of helps you narrow down location by what you want and what you can afford. One thing I say is you want to make sure you know what they're going to, what those taxes are going to be, especially if you're buying a flip or new construction. If you're using a loan, your loan officer is going to calculate that into the mortgage, right? But I do have people who are cash buyers and they're like, okay, let's buy this house. I love it. It's a great price, especially if, if it's a short sale or they're buying a fixer-upper or something. And then they see the taxes and they're like, I'm not sure. And I'm like, we need to be positive because you've got to pay that yearly, Can you appeal taxes? Yes, I'm not going to get into that. There are lawyers who do that. It's not as simple as, just going on to Zillow and saying, I don't think this is what the house should be. My CMA really means nothing. You really need to get a licensed, certified appraiser. And if you need help with that, I can recommend the proper people for you. As far as what you can do, and the reason this is coming up is because we're getting reassessments right now, right? So what are reassessments? Reassessments are essentially the town coming in and saying, look, the house prices have gone up. There's no question about it. The house prices have gone up across the board, and they want to capitalize on that. So your home that was worth $450,000 before is now worth $500,000 or $550,000, and we're going to change your taxes to reflect that. So a lot of towns in Bergen County are going through these reassessments. Taxes are going up, and I have a lot of people asking me, well, what can I do about it? If you are a senior, and these are really where I'm getting the questions from, there is a program, it's like a senior freeze program. In order to qualify, it has to be your primary home. You have to live there for a number of years. You and your spouse, it doesn't matter if you're both working or if you're single, the household income can't be above, I want to say it's like 94 or 95,000. They look at the past 2 years. Obviously, you need to go online and check this out for yourself, but it's slightly below 100,000. They ask you, is it an income producing property? Is it a multifamily property? Are you getting money off of it? Or are you just living there by yourself? All these things are calculated. If you apply, if you qualify, you can kind of freeze your rate where it is. If you're a veteran, thank you for your service. There are programs out there for you as well. Once again, you need to go on and apply. The same with disabled veterans. And those who are disabled in general, there are some programs where you essentially do not pay property taxes, and then the same thing for like houses of worship. All of this has to be applied. I can kind of point you in the right direction and to the right people who can help you with that. The final thing I want to say about property taxes, and this kind of just always scares a few of my clients every year, is you are going to write your check, your mortgage payment to the bank. And then the bank is going to pay your property taxes. Why do they do this? Property taxes are a primary lien, so they supersede everything else. Why? Because the town needs to run. The town needs money to function. So if you don't pay your taxes, and let's say the bank doesn't pay your taxes, or the house is paid off and you don't pay your taxes, the town can actually auction them off. And it goes to whoever the lowest bidder is. No, that sounds weird, but whoever says, hey, I'll pay your taxes, I'll front your taxes, you can pay me back with the lowest amount of interest. If in 2 years you don't pay them back, that person essentially has claim to your house. They can take your house from you. So the bank doesn't want that to happen. So you pay them, your monthly mortgage payment, and then they will write the check to the town. So every year I have at least one client who then gets the tax bill, because the tax bill comes quarterly, and they get really scared, like, oh my God, do I have to pay this on top? No, you don't. Your mortgage company is paying that. If you are very nervous, you can always just call your mortgage company and follow up, ensure that that's what's happening. Every single time I've done this for my clients, that has always been the case, but it's good, sometimes just to have peace of mind. So I'm putting information in the links. You can go to New Jersey Treasury to see what those general tax rates are, as well as those programs that I talked about to lower tax programs for certain individuals. You can find the links in this article, and I hope that gives you a little bit better understanding of why you really need to pay attention to what your property taxes are.